All right, so we are open for business here. Opening range gap high at 222.25. So always starting the opening range with that initial bias. We have no news today or Tuesday, and then we have CPI and PPI later in the week. So there's going to be a lot of volatility towards the end of the week. Price should be slow, but still clean on Monday and Tuesday this week. Again, as a reminder, we're always looking for that mid gap. So we're looking around 20,179.5. I'll take you out on a 5-minute chart. Show you the pools of liquidity. Here's minor sell side, minor buy side. Those are two pools of liquidity that I'm focusing on primarily this morning initially. Beyond that, we have this low here, and then we have this back here for primary buy side and primary sell side. I'll leave them up here for a second so you can put them on your chart. Full gap closure would be all the way up here. Mid gap is here, 20,179.5. It's always the initial draw for the first 30 minutes. I'm watching this volume imbalance on the 1-minute chart on the left side. I don't want to annotate it because I don't want too much stuff on the chart this morning. Earlier, you heard me mention I'd rather see that stay open. The fact that we came down and hit it puts you on the sidelines till 10. Okay, we got our first presented fair value gap on 1 minute. Initial low taken here, so we'll see what we get after having done so. I'd prefer to try to climb back above first presented fair value gap on the 1-minute chart, treat it as inversion on the buy side, and get back to mid gap. Mid gap gives me better visibility for the rest of the morning session. Using inversion fair value gap here, then rallying, subsequent fair value gap after that, that would be the entry, not just trading back into it. It's too disorganized so far to use the first return back into it. Coming back after a weekend, everybody's chomping at the bit to get into a trade. And this is when you want to be slow. Now, ideally, it should go higher from here. If it wants to go to that mid gap where it's at and how it's trading is fairly probable. But it has to displace away from it. It just can't be sitting in it and trade away from it. That's not the entry, in other words. See how it touched the first presented fair value gap right here? Over here on the 1-minute chart. See how demanding the initial fair value gap, trade above it, expected to see it as inversion fair value gap, displays higher, and then a subsequent fair value gap. That's the trade. Being in here, not the trade. Minor sell side's been taken. Now, I would suspect if it was going to go for the mid gap at all before taking out the lower sell side, it would need to do it here. Otherwise, it's just going to stay heavy throughout the morning and leave that gap for right now. See these smooth lows right here on 1-minute chart. Opening range traded back to lower quarter of the opening range gap. That's mid gap, lower quadrant, and then upper quadrant, and then previous Friday settlement. I'd like to see where it's at right here. I'd like to see it try to make an attempt to get back into first presented fair value gap. That's the gap over here on the 1-minute chart. That's this one right there. That candle defined by this candle's high, that candle's low. If it doesn't run above it and treat it as inversion and displays higher, and create a fair value gap there, I'm not touching it. Now, if I was inclined to be bearish today, and I'm not saying I won't be later on if something provides that information to me, but as of right now, I'm not interested in being short. But a return back into the opening price here, if it hits that, then displaces lower. After that, that would indicate potential weakness. I would not sell short on that, but that's how we would use the opening range gap, because we've been below it. But I'm more interested in seeing it trade above this gap right there, which is this gap specifically on the 1 minute chart. I want to see it trade above it, come back down, react off of it, displace higher, and then any fair value gap that forms on the 15-second chart over here, I would use that as a run into mid gap. Otherwise, all of this here, absolutely useless to me. I'm not trading it. I wouldn't want my son trading it. You sit on your hands. Fair value gap after running off of the first presented fair value gap. So while it did give a little bit of a run, no fair value gap formed, no trade. The buy side above here has been tagged. We're back inside the middle of the range. If you look at the 15-minute time frame, we're stuck in all of this price action right here. That's what's making this morning difficult. In London, if you look at what we have, this was Friday's first presented fair value gap in white. Then we had the opening of the week there. So this is new week opening gap, consequent encroachment, sells off, imbalance. There's a volume imbalance. You'll see that when we drop down the 5-minute chart. And there's this small little gap here on the 15-minute time frame. 5-minute. That's that gap there, all through here, 15-minute inversion fair value gap. It's bearish. Why? Because this is a buy side imbalance in the 15-minute time frame. It was, and trading back down, aiming for liquidity lower. This area here. See the entry right inside of the inversion fair value gap, and then failing to go lower. One was taken off and the other stopped. So there's covering one and then getting stopped on the final balance. So that's the only activity I had in the last 2 sessions. Back to this now. Minor buy sides taken here. Move that. Focus is here, mid gap. So what would you call today's delivery so far? What condition are we in? After taking you into the 15-minute chart, are we in low resistance liquidity run conditions, or are we in high resistance liquidity run? Are you seeing fair value gaps? Spending a lot of time inside them? So we're in high resistance liquidity run, and that's why it's delivering as it is. Here's that first presented fair value gap on the 1-minute chart that we're looking at over the perspective of 15-second. Spending too much time in here, too much time in here. See that? Opening range gap. Midpoint is consequent encroachment up here. Any movement beyond that takes us back to new week opening gap low, which is this level here, and then consequent encroachment. Any movement back below the first presented fair value gap on the 1-minute chart, which is this area here shaded. Well, not shaded. Let me shade it now. I'm sorry. Anything below that that comes back up and treats it as an inversion, it needs to, if it's bearish, let's say it that way for the afternoon. Like say we go up here and trade mid gap or bump the new week opening gap. If we break down lower over lunch or into the afternoon, and we trade below this and come back up and hit it and then displace lower on the 15-second chart, and it creates a fair value gap, that's something that I would, me personally, that's how I would trade the afternoon. But it would need to do the things that just said here. I'm not saying I'm bearish. I'm not saying I'm long or bullish. I'm presently still looking for this. I highlighted this inefficiency here because the way the market's delivering, it's going to be without precision because we're in high resistance liquidity run. So if it's going to lack precision, that means it's not going to come back to my first presented fair value gap. That's what I want. I annotated this one here, and you can see the body staying inside that, and then we sent it higher. Respected the volume imbalance here. We're inside of it now. I like to see it. There's a volume imbalance right in here, so it could spike down into that. See how it moves? It's give and take, but it takes a lot more than what you'd want to see in a low resistance liquidity run condition. If it makes a high, the run that makes the high, it pulls back real deep each time. Watch the volume imbalance still in that area right there. See the relative equal highs? What's just above that? There's your delivery. You want to screenshot that. So see how they went up into the volume imbalance, left the relative equal highs here, took your attention to the volume imbalance there. I said it could spike down into that. Volume imbalances are the least in terms of rigidness. I mentioned this to you many times. That means you got to let it trade through it and then come back above it. I said, now watch it in here again. It makes the very low of the volume imbalance. That means the body, that closing price on that candlestick. Look up here. Look at this value right here. 20,163.5. This candlestick's low. Right be on it before it moves. 20,163.25. So one tick variance hits it and then rallies to mid gap. Your attention was taken into this imbalance because it was not likely to trade back down into our first presented fair value gap. Why? Why would it not come back down into it? Because it's already proven, as I was talking about this morning in the very little speaking that I did, the absence of precision, the fact that we spend so much time inside the inefficiencies means that we're in what? We're in high resistance liquidity runs. High resistance liquidity run conditions are not going to have elements of precision. That means the things that you really want to see deliver, they may be deferred. They may have deeper retracements in the price runs that you're part of. But more specifically, it's not going to deliver to the PD arrays as perfect as a low resistance liquidity run condition market would be. So as I was indicating, I wanted to see this gap, this shaded one here in orange. That's the first 1 minute presented fair value gap between 9:31 and 10 o'clock in the morning Eastern time. I wanted to see it trade above it here, uses inversion and displace higher and create a fair value gap. You don't see that here on a 15-second chart. So there's no missed trades, there's no stop out, there's no wrong logic. Same thing here. It's trading above it. Now the difference is because I had told you that we're in high resistance, it's not likely to come back down into that. So I took you right into this inefficiency right here, and the bodies stopped that, and then the small little mohawk there. I mentioned that we would be reaching for this as the initial draw in liquidity. That's my bias. That's how I'm teaching my son to look for that bias. Even though it doesn't trade to it within the first 30 minutes, by 10 o'clock, I'm filtering. I don't want to see this as a shorting opportunity. So if it goes lower, it's going to go without me. If it goes lower, it's going to go without Caleb. So keeping my focus on the mid gap, that consequent encroachment of the discount opening gap, we got lower than Friday's settlement price. Friday's settlement price is up here. So sticking to one side of the marketplace, adhering to specific rules, but identifying high resistance liquidity run conditions. That means if you're going to tape braid, you got to have some understanding that you're not going to probably get the very perfect entry like a low resistance liquidity run market would deliver, where it would be trading above this gap here, coming back down, touching it, maybe going mid gap, and then displays higher, then creating a fair value gap on a 15-second chart. That would be Caleb's setup. That's how he would use it today. But because it was identified to you beforehand that it was high resistance liquidity run conditions, that return back that I was outlining as a setup wasn't likely to deliver. So I went in and I framed this one. and that's where the body stopped. We wicked below it. That's the damage. And then we rallied higher. Volume imbalance used here to run right into consequent correction on the gap.